Michael, welcome to the Infinite Wealth Podcast. We're excited to have you on the show today.
Yeah, excited to be here, Cameron. Appreciate it time.
Absolutely, man. I'm excited because you've got a great story and a great background, and I know our listeners are really going to appreciate somebody else talking about infinite banking other than just Anthony up here yapping for an hour. So today's going to be great. Michael, if you could just start us off, tell us a little bit about your background and kind of what you're doing, and then we'll kind of get into the meat of today.
Yeah, more than happy to. For me in particular, ever since I was 8, I would be outsourcing franchise lemonade stands to neighborhood kids and taking a
No
cut of the
way.
profits at day's end. Yeah, so
What?
always had that. Yeah, that young hustle entrepreneurial spirit was very much in line with just who I am as an individual.
Huh.
And luckily, I had a grandfather at the time who was a battalion chief at the Seattle Fire Department. And that season of his life, he didn't never made too much money, but with the money that he did make, that didn't go towards supporting himself and his family. He slowly but surely started to set it aside towards real estate, right?
Mm.
Nothing super sexy. He just started building up a real estate portfolio that cash flows, right? And then from there, he rolled the cash flow, right, into other investment properties. And within 10 to 15 years, he did very well for himself. And he noticed that young entrepreneurial hustle and really took me under his wing and taught me everything he knew about real estate investing. And, was really inspired by him to eventually start what is today known as Storydoor back in March of 2020. And you all are very well aware of what transpired around that time period. It was a very tumultuous time to start a business, to say the least, but we were blessed and fortunate to be able to get through that trying season, and we're here today, which is great. Was born and raised in the Pacific Northwest, or I should say was born in Houston, Texas, was raised in the Pacific Northwest. So
Nice.
Seattle, Washington. Yeah, went to school out here at the University of Washington, um, and got a degree in accounting and finance, right? And really decided in terms of, hey, infinite banking could be something of interest. I was introduced to it a few years ago and was really a little bit, not necessarily off put by it, but didn't really fully understand the concept. So I didn't end up moving forward with it at the time. Albeit later on, I ended up finding, just call it happenstance or divine intervention or call it what you will. I ended up happening upon your guys' YouTube channel, learning a little bit more. And I thought to myself, hey, this seems very fortuitous considering where I'm at in my life right now, starting very young. Would make a lot of sense for me. So decided to book the call with Anthony, and the rest is history. So
Awesome. Appreciate the overview. Michael, appreciate you sticking with us. We're going to work on this video here. So we'll kind of keep going. We'll bring this thing back. But I've got a question for you because your story, what you just shared as far as kind of visiting infinite banking or getting introduced to it the first time and then putting it back on the back shelf and kind of coming back around to it is common.
yeah.
What was it, do you think, the first time that maybe turned you away or you didn't end up moving on it? Do you remember?
Yeah, I think it was. I mean, this just goes back to also not only the importance of the person, and as far as when it comes to artificial intelligence and machine learning, and the fact that it's at its infancy, I truly believe that we're still a long ways away from it fully replacing that human connection aspect.
Yeah.
All
Yeah.
right. So that unfortunately, the individual I was speaking to, I felt like this was more of a transactional basis
Mm,
of, hey, I want to make a sale, right? And it wasn't really too educating whatsoever. It was pretty much like, hey, here, have you read the book by the grandfather Nelson Nash? No, you haven't? Okay, you should go out, buy that book and read it. And then that was pretty much it. And then we got off the call, and he would just continuously follow up with me, like, "Hey, did you get the book yet? Did you get the book yet?" It was just rather off-putting in a way.
I'm with you.
Yeah. So when I actually booked the call with Anthony, I was a little apprehensive going into it just because of the prior experience. But and I'm not just blowing smoke in this instance. I call it like it is. I'm going to tell you the good, the bad, the ugly. And Anthony, I could tell he had his client's best interest at heart, or he had my best interest at heart. He wasn't in this just to make a sale. He was in this for the long haul, right? Case in point, when I needed something in regards to my financial situation, I actually purchased a property in Los Angeles. The goal is to move down there, live in one of the units and rent the others out, and then be close to my family and pursue acting and real estate for the rest of my life, right?
Hmm.
So very eclectic interests, but I had to come to Anthony and say, hey, here's a situation. We're currently needing to stabilize this fourplex that we purchased in Marina Del Rey. Right now, it's not fully stabilized. And given the ludicrous landlord tenant laws in LA County, it may take a little bit longer than I was expecting. He said, Michael, say no more, no problem. We'll get you taken care of, right? We were able to adjust and had that flexibility to adjust the policy. So just the intangibles, the little things that most advisors wouldn't do because it doesn't seem like it's in their best interest, but they truly, or Anthony truly did have a fiduciary duty, and he actually, prescribed to that, which was really the differentiator, was just the human aspect.
Nice. Yeah, as much as we like to make fun of Anthony around here, he does got a good heart, man. He's out there to make sure his clients, he's taking care of them, making sure what's in their best interest.
And speaking of making a difference, I'm the one who fixed this whole camera issue. How I did
Come
it,
on.
I don't know, but I'm going to take credit for it, and hopefully it stays.
Fingers crossed, Michael. I got to tell you, man, you're professional. You didn't even miss a beat. Like that thing turned off, and you just kept on going. I was like, all right, this guy's a pro here.
And camera, you did it all too. I thought for sure you were gonna. Yeah, I saw
Stumble
you shake a little
yeah.
bit as soon as I left your side.
Actually, I was actually standing right in the middle as I was enjoying all of the limelight that was shining down on me once you stepped away, which is great.
Oh, I love it.
Michael, I've got the other question I've got for you is kind of as you started to kind of reacquaint with infinite banking and revisit it. Typically, not everybody in someone's spheres heard about infinite banking, and you get a lot of noise, a lot of feedback of like, "What are you doing? What is going on here?" Right? Can you walk us through that? Was there pushback? Did the people in your sphere know about infinite banking?
Yeah. So I'm sure many of you have heard of the famous or the infamous, depending upon your perspective, Dave Ramsey video where he tears apart infinite banking, right? I feel like that's the reason a lot of individuals actually lose potential clients is from individuals going and finding that Dave Ramsey video, right? But no disrespect to Dave Ramsey because he is head and shoulders above where I'm at. Maybe one day I'll even be even close to that if I'm blessed and fortunate to do so. But I feel like certain aspects it was a little bit, I don't think necessarily fully gave it the benefit of the doubt and actually dove deep into it himself to learn a little bit more. And maybe he spoke with the wrong advisor, right? Case in point, like I did, and just was soured to the whole idea. But luckily, I was able to have that conversation. I think initially we may have had it with Anthony. I'm not sure. I brought up that video and Anthony was able to speak to it. But I think that in particular video was a little bit, something that I needed to get over, right?
Mm-hmm.
So watching that video of, okay, how can we, how can we explain this or what's the premise behind that, right?
So you had some noise mainly coming from kind of Dave Ramsey. What about kind of your inner circle, your friends, right? Had they heard about infinite banking? Did they question your thoughts?
Yeah, great question. So I go to a church, just Christian non-denominational church, and we have a marketplace group at that church where a lot of the business guys and gals get together on a weekly basis and, just go over, biblical morals and values as it relates to the marketplace, right? And I've grown leaps and bounds from that group. And actually, it wasn't in the group, but it was after the group when we were all conversing. An individual actually had infinite banking policies. He had two. One of them he inherited from his parents, and I just got to thinking, man, it would have been such a blessing if my grandparents had the foresight to do something like that. So I would like to pay it forward, get started sooner rather than later. So that was kind of the additional confirmation that, okay, this is something that I could look into. So it doesn't directly answer your question, did I receive pushback? But it does answer your question in the sense that I actually didn't receive pushback. I received confirmation from my inner circle. I know that's not everybody's story, but I'm blessed, I guess, to have that kind of network such that, individuals have heard of it and are leveraging it in their own lives.
What a testament to getting to church too, listeners, right? If you guys are out there,
Amen to
get
that.
to church, get in this marketplace, right? You'll find some really good guys there. Michael, so now let's kind of jump into your story, right? So, right, you've kind of approached infinite banking. What was some of the ways that you've started to implement infinite banking in your life?
Yeah, for sure. So Fourplex in LA, perfect example. So that helped to pay for the down payment or a portion of the down payment I was saving up. So that was one of the things. And albeit it's not something that, as I said, is stabilized today, it's something that we got at a great value in comparison to what its current value is, as well as what we can actually do with the property. So to level set with you all, it's actually a legal triplex with an unpermitted fourth unit. So it's a fourth studio unit, and it's been that way since the 60s, right? When it was built. It's actually in the shape of a boathouse, which is kind of fun. Yeah, very unique in that way. Albeit when we got the appraiser out there to perform their appraisal, the as-is value was about, I think he said 2.55, and we purchased it for 2.3, but here, or 2.38. And here's the magic. Simply by permitting that fourth unit, and then, doing our reno plan on the property, we were spending about 140,000 in the reno plan. We ended up spending a little bit more than that, but in the rental plan, it was about 140,000. And the equity on the property increased from, as I said, 2.55 up to $3.35 million just by permitting the fourth unit, right? It's ridiculous. And the cash flow on the property, even though it's Los Angeles, once we actually get it to market rent, in conjunction with potentially some midterm rentals with some traveling nurses, will probably be close to 25 to 35,000. And then after, OpEx, and then whatever we set aside for CapEx is probably going to be looking closer to, like, conservatively, like 5 to 8 grand. But that's pretty much being paid 5 to 8 grand to live there, right? And that was all provided in part thanks to infinite banking, right? Being able to take those policy loans out. So that's the biggest thing so far.
Okay, so Michael, what I'm hearing is that you use a policy for the down payment of this, and also to do some improvements. And
Correct.
by doing those, you've increased the equity almost $1 million. Am I correct?
You are correct.
Okay.
Right?
So
Yeah.
Good job on the math, by the way.
Yeah, thanks.
Yeah. Bonus points.
I am a CPA, Cameron. So, but here's the point. You found a good investment, and you used IBC to do it, and you grew your wealth by $1 million. Based on that, do you think how much do you care about the dividends or the rate of return on your policy?
Yeah, not as much. It's just a tool at the end of the day, right? That's how I see it.
Exactly, because what I've seen with a lot of people, I mean, Michael, you're unique in many ways, but you've already were investing as well, and you're using this as a tool. For many of our listeners, they're new to the game, and they're new to this exposure. But what I found, and tell me what you've seen, Cameron, is once we freed up their dollars, because most of the time their money is locked away in a government controlled plan like an IRA or 401k. And they don't even think about opportunities or investing. But once they free up that money and are exposed to the opportunities that they have, that it's a game changer, right? I feel like we take the blinders off, and now that we have control, we can see what the wealthy and what a lot of these other people are doing. There's no reason why the individual investor cannot do the same.
Yeah, no, I'm into that.
Now,
I thought you were gonna still go.
No, I was just making a statement. Michael, what are some things that you don't like about infinite banking?
Yeah. I think one thing is something that, it is what it is, but it's something that ultimately, the benefits outweigh the cons. Whenever I make a new decision, usually I do just a little exercise where I have a piece of paper. It's not anything super fancy or sexy, but I put a line down the middle of the piece of paper. I have pros on the left, cons on the right. I write them down, right? The number one con, at least for me, was the time in which it takes for you to actually get to the point where the policy you're taking out more than you're putting in, right?
Mhm.
Granted, that depends upon there are a myriad of factors that determine that, in regards to how the policy is built, et cetera. But at least for me and the policy that you built for me, Anthony, it's actually not too long, which is fantastic in comparison to like the average policy.
Mhm.
I think it was something, correct me if I'm wrong, like 4 to 5 years for mine or even less versus the average policy that I see on the market is close to like 7 to 10. I'm not the expert, right? You guys are, but that's what I would say. And then the second thing is, which I would love if you'd be willing to take this, Anthony, because you had a perfect answer to this. And I feel like this could bring value to the listeners as well, is kind of the difference between direct and indirect recognition. I know it now because you explained it to me, and kind of
Mhm.
how that functions into it. Because I've spoken to some advisors before, and they're like, "Oh, you're in a direct recognition. That's bad. That's horrible. You're going to end up doing bad long term," when that's just not the case based upon what you showed me. So I think that would be super helpful as well. But yeah, if that makes sense. So those two things. But yeah.
Michael, I love that you are turning the interview around and asking us questions. And to put a little cherry on the top, you're like, Cameron, this is not for you. Okay. Do not
Cameron?
answer, Cameron. This is for Anthony.
I love it.
Yeah.
I love it.
I'm not gonna lie, I smirked when you're like, Anthony had a perfect response. I was like, man.
Okay,
You're like, oh man.
So Cameron, there's two types of companies that apply dividends, and it's either called direct recognition or non-direct. And in essence, a direct recognition directly recognizes that you have a loan outstanding. Non-direct does not. And the difference is they direct recognition company may apply a different dividend rate for the cash value that you have loaned out. Non-direct will pay you the same dividend whether it's max loans or not. And the initial reaction, which is what I had as well, is why would I go with a non-direct? Because I'm planning to do banking and I want to use these policy loans and put the money to work. I want to maximize the dividends, right? But we have to do the math. Now, what I've seen is most of these direct recognition companies tend to pay a higher dividend.
Mm.
So and part of it can be from the insurance company's perspectives, it gives them some more ability, to manage rates and to manage loans. So if they're able to earn a higher rate than the loan rate, that's hindering the performance of the insurance company. But with the direct recognition company, that kind of manage that will minimize that. But to me, the bottom line, like I said the other day, the bottom line is the bottom line, which Cameron loved when I said that.
It's a nugget.
Yeah, we have to do the math. Mm-hmm. And what we've done the math multiple times is if we look at a direct recognition company versus non-direct, I tell you the direct recognition company we use typically outperforms the other carriers, which is why we use them. But also one thing I want to keep in mind, this direct recognition company pays the least commission. Mm-hmm. Okay. So,
yep.
Which when you're that's one of their larger expenses, and they have their commission expense is going to be less than others. So they already have an advantage, and they can pass that along via the dividends. But what we did is, if we ran the math, just solely looking at the illustration, typically the direct recognition company is going to outperform. However, since we're planning on taking loans, that's not a fair assessment. We need to take into account the impact on a potentially lower dividend. So what we've done is we did the math and we did a max loan every single year, right? So we can truly see the impact on what a potentially lower dividend is going to have. And what we found when we ran the math and then we and we look at age 70, numbers are just about the same.
Yeah.
Right. So
Mhm.
what that did for me, because part of this, if we're going to use a direct recognition company, we need to make sure that it's best for our client. And so we did the math to show, even with the max loan, we're going to be in the same spot. Okay.
Yeah.
But also, it's going to be rare that you're going to do a max loan every single year,
Yeah.
right? You're going to keep some money in there, as well as you should. And sometimes you may have very little loans in there. So thus you will get a higher dividend. So thus you will end up being ahead. And also, Michael, as I told you, there's a lot more that goes into picking a company than the dividend rate and even what the illustration looks like. Because, for example, Michael, I know when we first met, you actually had a policy with another company, which is a great company. They are a good company, right? But one of the reasons why we don't use them is they have limits on changing the PUAs. And for example, I mean, so that particular company, either you can only make a change on your anniversary. And how often are you going to have a financial issue where you need to lower your PUAs or your premiums? Rarely is that going to happen right on your anniversary. Right. Or what that company will do is you can pay PUAs 3 times a year, which typically isn't that conducive. Most of our clients were typically doing it on a regular basis. And what's interesting, Michael, you've ran into some cash flow issues where we needed to lower or drop the PUAs temporarily in the middle of the policy year. And because of the company that we chose, they have the flexibility of the PUAs. And I think we need to take into that, which even if the other company may be illustrated better, if we don't have that flexibility to change the premiums when we need to, who knows what, I mean, maybe we end up losing that policy or something negative or some more stress is going to happen.
Yeah, no, really good answer there. But I would say, at least for me in particular, it seems like that's a common fallacy in the industry. At least when I talk to other individuals, it's like that's what a lot of clients are hearing is direct versus non-direct recognition, right? That's kind of like amongst other things. But I feel like that once somebody actually understands IBC a little bit more, that's the thing that's the kicker. It's like, okay, that's the next kind of hurdle to get across to learn a little bit more. So that makes sense. But Cameron, I don't want to let you.
No.
Yeah,
I was going to jump in there. I was going to say there is a level of education that needs to be communicated to clients on direct versus non-direct. And once somebody kind of goes through and understands the differences between the two, like Anthony said, is at the end of the day, a lot of times they end up being really, really close. Right. And so that is the takeaway. And what I tell everybody is that if you look at the industry, right, is if one was better than the other, the entire industry would go that way. Right.
Yeah.
But because we've got direct and non-direct, that tells me that, hey, they're both going to end up in a pretty similar spot. And so there should be some intangibles that also are factored in there. Right. Anthony mentioned some of them just on the funding, some of the kickstarts and stuff that you can put in there. So great point.
Here's one thing I found when you're dealing with an agent on their stance between direct or non-direct. It's going to happen on what company that they sell for, right?
Yeah.
If they're a direct recognition, non-direct recognition company, they're going to tell you non-direct is the only way to go, right? And if they're a direct recognition, they're going to tell you it doesn't matter. For us, we're not independent. We're not tied to one insurance company. We work with multiple ones. So we have a direct and we have non-direct, and we don't decide to use which company based on the dividends. It's more based on your situation. How much flexibility do you need? And how are we going to design the policy? That for us is what's going to determine the best insurance company for you.
And additional, I'll add on there, is that I think the prudent measure, right? If someone's doing infinite banking, typically they're going to have several policies. I think a prudent measure is to have a portfolio policies that's made up of direct and also made up of non-direct. So
yeah,
it solves all the issues. Yeah.
Michael, were there any? So what I heard is what things you don't like about IBC was what we call that slow start, right? Where dollar in takes a little bit for a dollar out. And we kind of handled the direct versus non-direct. Were there any other things you didn't like about infinite banking or going through our process?
Yeah, no, I don't really think so. Yeah, those are really the only two things. I would just say, yeah. In regards to the knowledge sharing in the industry, that was better than I thought it was. So in regards to opportunities, I think it was something I was discussing with you, the opportunity that I mentioned the other day, and it's something like, yeah, let me look into that because it's something we might, be interested in offering our clients. So that's not like a bad thing. It's actually a positive, but I do like kind of the knowledge sharing in the industry, in particular. So,
Yeah,
but yeah, no other bad things.
I found some of the top IBC firms are very abundant mindset, and we will share. We will share ideas, and there is the annual think tank that's put on by Infinite Banking, where it's an opportunity for us to network, but also share ideas.
Yep, I love it. Love it, love it, love it.
Michael, so we did discuss a few things that we didn't like about infinite banking. I don't know if we asked you kind of the inverse or the opposite. Obviously, what are some of the things that you do like about infinite banking?
Yeah, no, for sure. So I think the number one thing for me, at least, was the flexibility. Because as Anthony said, case in point, when he mentioned that, yes, I was going through some cash flow struggles, that's because of this property that we purchased that isn't stabilized currently in Los Angeles County, right? Where it's, the mortgage is 20,000 plus, right? And it's bringing in only about $7,000, right? You do the math there.
Yeah.
So with that being said, it will take a little while to get stabilized, but once it's stabilized, as I said, we get almost $1 million in equity. And then the net operating income after expenses is probably like, $5 to $8 grand, which is great. At least, especially in LA County, considering that it's going to be a house hack for me, meaning I'm going to live in one of the units, rent the others out. I'm going to be living in the studio just because I'm a single guy in my early 20s. I don't need, the additional fancy 2 units, and that's going to be taking away additional cash flow towards the mortgage. So that's the premise behind that. So number one, flexibility. Number two, I would say would be the illustration. I know Anthony said don't focus on the illustration, right? But my illustration, at least, was fantastic. Like, case in point, so I was working with another individual initially, and they brought the illustration of the company that Anthony and you mentioned, and it looked fine, but I didn't really have a reference. And then I connected with Anthony. He showed me the illustration. It was just head and shoulders above that of the company that I was using prior. And then I was looking at some other alternatives as well, and we looked at the illustration differences. And again, it was head and shoulders above the other. And the other advisor kind of tried to explain it away in a way that was a little bit opaque. And I was like, I think I don't know what you're getting at there. So maybe you're just smoke and mirrors. Other than that, so with that being said, number two was the illustration was great, right? It was for my needs. Right. Going back to what you guys said is you guys tailor it to your client's needs. So tailored illustration to my needs is second. Let's see. Third, I would just say it's the human component with you guys. At the end of the day, as I've said, is, it's going to be harder, at least in AI and ML's current state, for it to entirely replace the human element. I think we're still a far ways off from that. So with that being said, just having that human element of somebody who genuinely cares is in it for the long haul, as opposed to that short-term transactional methodology of, hey, let's get as many people through the door as we can and then provide subpar customer service just because that's more lucrative for us, right?
Yeah, so I've seen some IBC firms where, they're truly running it like a streamlined business where they've allocated different jobs for certain people, and so which sounds efficient as an operator, but as far as a client, you don't have that personal touch with the same coach. And actually, Michael, as I did a poor job trying to fix his camera, it made me remember that you also were approached by another IBC firm, and they were talking about how great the direct recognition or non-direct was, and and they gave you an illustration of a non-direct recognition company. And Michael, you and I, we haven't met yet to go over it, but we were able to do a design that really beat the pants off of that other company. So again, it's a lot more. There's just so much more that goes into it. You know, Michael, I don't know if you're at liberty to say, but when we had talked, you had shared with me the difficulty you had of trying to get this fourplex permitted, and you had a little issue with the tenant. I don't know if you're at liberty. It's an interesting story. I went home and told my wife, you were not going to believe what they're doing in California. Are you at liberty to share that story at this point? If not, it's okay.
I can share. I can't share any details, no, obviously, about the tenants or anything like that. I can share what their counsel sent to me in regards to their demands. I feel like that's a little ludicrous, and it's fine for me to share that. But I'm going to be general in it. And other than that, there's not too much more I can go into. But long story short, we stepped into a situation with an unpermitted unit. We were served with a notice to comply from the city of Los Angeles, giving us until, I think it was, November 14th. I could be wrong about that. So I know this is recorded, so that might not be correct, accurate, but I know it was in November to essentially, comply with their notice. And if you go to Los Angeles's website, receiving a government order is grounds for essentially no fault eviction is what they call it in the city of LA. So with that being said, reached out to the tenant in a very empathetic way, said, I'm so sorry. This is a situation. We received this notice to comply from the city of LA. I'm willing to pay for your moving expenses. I'm willing to write you a letter of recommendation for your new landlord. Within reason, we're here to help, right? And crickets, heard nothing until a little time passed and we heard from their attorney. And their attorney said, okay, so here's how it's going to go, right? This isn't the exact words. Again, I know this is being recorded, but this is essentially what they got across. They said, we're not going to get out, right? We are going to stop paying rent because we never needed to pay rent in the first place because it's an unpermitted unit and you don't have a certificate of occupancy yet, which is actually true, right? Crazy, but true. I actually knew that was likely going to be something that they were going to try to play. It's kind of like a game of chess in that way. And then they also said, we want a rent credit for the rent we've paid, right? Over the past 10 years, right? Ludicrous, which was like 100 and, something crazy 6-figure amount, right? And we just purchased the property back in September. Okay. So it wasn't us actually charging that. And then they're like, we're going to sue you for all these different things, right? Because, you're unlawfully evicting us, which is, in my humble opinion, not true. And then also they said, we'll get out if you give us $110,000 in a cash for key situation, right? So that's the situation. And other than that, I'm not too much at liberty to say what else, but we're working with our own counsel to see what can be done in this particular instance, to come to an amicable solution. I didn't want to do this in the first place. I reached out, I said, hey, I want to come to a peaceful solution. And they were calling my outreach harassment, right? And I was being very empathetic to their situation and very professional, no slurs or anything like that. So we'll just see, it's in God's hands now. And, we're taking the appropriate action steps. So, yeah.
I think one point, which I'm sure you realize, maybe even aware of beforehand, we have to be very careful of the state laws that we're investing in. Some of them are more friendly to the landlord, some are to the tenant. great state of California, definitely more on the tenant side. And I know we talked about it, but there was, and this got national news where there was somebody in California that had rented out, I don't know the particulars, maybe a casita or a second dwelling on their property. Person rented it for 6 months through Airbnb and then just stopped paying rent. They were there literally over 500 days and they would not leave. And it was some of the same issues you were talking about. They were able to find a little loophole in the law where it wasn't properly permitted. So thus he wasn't allowed to charge rent, but the tenant, I don't know if you call them a tenant because they weren't paying, but the person living there,
squatters,
the squatter wouldn't leave so they could fix the problem to get it permitted.
Yes, that's exactly what we're
so
in. Yep.
But they said, but for 100 G's, we will walk away. But fortunately, this became national news, and then eventually the squatter left. But
yeah,
I would love to know why these squatter rights are still on the books. Like I could see maybe in the gold rush in the 1800s, but I don't understand. But that gives me much pause to own property in California, or we live in Las Vegas, so we've considered maybe buying a vacation home or something out there that we could maybe our Airbnb and that we could use as well. But when I hear all these stories about what California is doing, it makes I'm very concerned.
Yeah. No, LA County is very, very difficult. It just is the nature of it. I mean, life isn't fair, so we're rolling with the punches, but it in my humble opinion, has gone too far in the tenant's favor. Even California laws are so much better than LA County, right? Because this is subject to LA County's laws, which are next level. It is so asinine. It's gotten to the point where it's just very difficult to navigate, and it's one of those things where because of how bad these laws are, or how, let me change that vernacular, because of how difficult these laws are to navigate for landlords, it's caused a lot of landlords to not be able to afford the mortgage, to foreclose, right? And it goes back to, the bank, who isn't going to be as kind to these tenants
that's for sure.
Mom and pop. So, but the tenants aren't thinking that way. They're not thinking, hey, I got one heck of a deal. For the past 10 years, they've been paying $1,200 a block from the beach, or pretty much a block from the beach.
Wow.
Okay? They shouldn't be paying that. They should be paying, anywhere between $4,000 and $6,000 a month. So
wow,
they're not looking at it of like, hey, I'm so grateful for the deal that I've gotten for the past decade, right? They are coming at it from a very entitled perspective of, hey, this is my home. This a-hole is coming here to try to take it away. When in reality, it's like, I'm so sorry. If I don't do this, it will go to foreclosure because I cannot pay $15,000 plus out of pocket every single month, right? And again, to even get to this position, I saved up for 7 years, living far below my means, doing all these things. So I was thinking to myself, hey, if you were in my shoes, you could have, for the past 10 years, taken that rent that you were saving, putting it aside, and bought this yourself, right? Make the sacrifices that I have made to be able to afford this place. And you might think, oh, you're fancy, you're privileged, you get all the, no. I actually saved a vast majority of my money working as a lifeguard and swim instructor in high school, right? That's where I saved a lot of my, I didn't do hardly anything when it came to costing money. I think there was one story where my friends were out to like dinner and they were having a nice dinner, and I brought my, I think it was Subway or it was some sort of sandwich shop, right? That I purchased. I took it out. My friends would give me crap, right? Of like, oh, you're doing all these things to save $1. But I always had my eyes on this goal for the past 7 years, almost decade, to get this done. Ever since I was like really 12, I was not thinking the way an average 12-year-old was, because of my grandfather of like instilling those morals and values and thoughts at a young age. and really changing, the paradigm and the trajectory of my life, just because I listened to the words of wisdom that he preached at a young age, right? So it's just one of those things where it like goes back to the whole situation of, hey, I'm trying to work with you here. I would have rather not involved attorneys, right? I wanted to handle this peacefully, but that's just not the way they wanted it to go. So as I said, we're working through it, and we'll do what we can to come to an amicable agreement and move forward from there. But it's a real shame, right? It's a real shame. So,
I'm gonna do a quick little pause. I don't think we're gonna be able to get the camera going. I think the battery charges and then it drains.
Yeah.
But the main
no
focus will be the audio for the podcast.
Sure.
So we still got that.
And I've got really just one more. Right.
I got two more. If you have one more, I got two more.
Well, I got three.
Fire, gentlemen.
Yeah.
I got three. I got
go in with yours, and I'll wrap up with mine.
Michael, one thing. Well, here was a comment. Kind of what I heard is, regards to this duplex, you sacrificed some of your savings by lifeguarding, bringing your own lunch in front of friends to build up enough money for the down payment. Or, Michael, you know what you could have did? You could have stayed a block from the beach, right? And then just waited. And now these people are this is their savings plan. They're trying to get $110,000. So a lot of different ways to make wealth.
I guess so, right?
Michael, one thing I wanted to talk about is that when we first met, one thing you were doing is you were also investing in some crypto and some stocks. And so explain how you were using the policy in order to do that on a monthly basis.
Yeah, for sure. So nothing too sexy. At the time, I actually took all the money that I invested in crypto and put it towards the down payment for this property because, as you can imagine, it was rather sizable, right? That's what I was saying when I was saying I was putting technically what ended up happening is I was putting the dollars and cents to work by dollar cost averaging into crypto, right? With my policy. And then as that value grew, I took the crypto, and then I essentially was able to use the money that I had gained in crypto as down payment for the property, which was very helpful and fortuitous there. So I just invested at the right time, didn't do anything too sexy, just dollar cost average. Now using central exchanges, there's pros and cons to that as opposed to like a cold storage wallet, like, a Trezor or whatever you may be using, which I'm primarily using nowadays. But I honestly didn't keep very much crypto at all, which unfortunately I'm regretting, especially right now. But honestly, in a way, I think, what I did was best given what my goals were for so long. And then also ultimately more of a guaranteed increase over time, because as brutal as the laws are in LA County, I truly don't believe just because it's LA real estate, a block from the beach in a beautiful area in Marina Del Rey, in terms of capital preservation and appreciation, you can't get much better than that, right? Cash flow, it's a hit or miss depending upon your plan, but capital preservation and appreciation, it's a great market in that way.
Michael, one thing I think was interesting is what you were doing is you were making your premium at, say, the beginning of the month, and then we were turning around and taking a loan against it, and you were using that to finance the purchase of the crypto, which I thought I thought was unique. Michael, we kind of skipped over some of like what it is that you do, and you'd mentioned that you had started Storyboard. Would you mind explaining a little bit more about what that company does?
Yeah, no, more than happy to. I love it every single time that somebody gets, so it's Storydoor, but every single time that somebody gets the name wrong, it's always Storyboard, which made me think, man, I chose the wrong name. I definitely chose the wrong name, but it is what it is. Storydoor. So yes, Storydoor, we are a real estate investment company. I initially founded the company because I was inspired by my grandfather. A lot of it goes back to him. He served in World War II, came back, and as I said, he was a battalion chief, or worked his way up to battalion chief at the Seattle Fire Department. But what I skipped over was the fact that he came back from the war, the hero, but not the same man. Struggled with PTSD all his life, and then turned to, alcohol. We call it substance use disorder in the industry, just an overarching term, or alcohol use disorder can be used interchangeably. And he struggled with that his entire life. So even though it was a positive story overall in regards to what he was able to accomplish and do, I'm just thinking, well, what could his life been like even better, right? If he would have come to a home, a caring recovery home, that could have taken care of him and worked with him to get him through his struggles with alcohol addiction. So with that being said, my heart behind starting Storydoor was to find off-market deals to then convert into recovery housing for people struggling with what we call, again, substance use disorder. So anybody struggling with, drug addiction, alcohol addiction, et cetera, in layman's terms, they would go to our homes to go to a safe, supportive environment. And then we partner with local social services in order to provide care to our program participants. So that was the why behind it. But really, we're a real estate investment company that specializes in acquiring off-market deals and then either keeping them in our own portfolio if they fit our strict 26-point checklist for a recovery house, or selling them off to our list of investors that we have for a profit. So, yeah.
Cool.
Great. Yeah. Thanks, Michael. Michael, as we wrap up here, right, is our listener base is made up of clients, but also listeners that are new to infinite banking. And
Sure.
so some of them are just kind of listening to this for the first time, wondering if it's for them or not. I know you went through some of the pros and cons, but what would you speak to someone? What would you say to someone that's sitting on the fence?
Yeah. So I would just say, no matter what you're doing, you owe it to yourself and your family and your future family to just have a conversation with somebody, regardless of whether or not you move forward. I'm not even say Anthony or Cameron, even though they're great. And that's who I move forward with, because I spoke to so many people. But at the end of the day, make sure that who you go to has your best interest at heart. And you can just tell if they're talking, if they're being genuine or not, or if they're just in it for themselves. So with that being said, that's what I would say. Make sure you vet this individual. In that instance, make sure that they know what they're talking about. And again, you at the end of the day know that, hey, I have a good feeling about this individual, that they do have my best interest at heart, and they're taking that long-term partnership perspective as opposed to a short-term transactional one.
Well said. Thanks, Mike.
Yeah, my pleasure.
I would say, Michael, as we're wrapping up, I'm a little disappointed in you, Michael.
I know what you're
Did I not throw enough shade?
No. Well, you didn't throw any shade.
He's a gentleman,
at all.
man.
I know. I'm sorry.
Yeah.
I'm
But
really bad
always
at that.
looking for somebody to have some better hair than Cameron.
Mhm.
And I'm sure you got that as Italian locks. I was hoping to see something to put Cameron to shame, but you're kind of, I respect you that since Cameron's one of the hosts, that you're not intimidating him. So that's why you put on the hat. So I appreciate it, Mike.
Yeah,
it is my pleasure. Yes, I'm repping the Storydoor today.
Yeah. And Michael, if you get us the link to Storydoor, we're happy to include that in the show notes. And hopefully some of our listeners can kind of reach out and see what you're about there and hopefully participate potentially. But Michael, thanks again. Really appreciate you coming on the show and sharing your story. Very insightful, and thank you.
Amen. Thank you, gentlemen. Appreciate the time.
Go make it a fantastic day.
Take care.
Bye-bye.